With the recent rise in Tesla, some traders were pulling in on their experiences from Bitcoin back in late 2017, when it rose and rose again and again, seemingly without reason. The temptation is to sell into any rise, again, without reason. Seasoned traders will tell you that when a trend is in place, it's wise not to get in the way and just take the ride up, cashing in on profits along the way. Let's talk now to one such seasoned trader, Serge Berger from thesteadytrader.com. Serge, it's good to catch up with you. Before we get a look at a chart, can I ask you first of all about the behavioral science behind this? So we're all wise after an event like what we've seen in Tesla recently, but when it's happening, why don't we trust in a trend?
I think even though trend following, statistically speaking, is by far the most successful strategy over time, I think we have to differentiate between orderly trends and parabolic trends. And whether it's it's a chart like Tesla or Bitcoins or anything else that has given us parabolic charts, I think that's where people find difficulty, and quite frankly, rightly so. When something goes from a steep slope to a vertical ascent, we know statistically that mean reversion happens, and it tends to be pretty ugly. So I think what happens is for most retail traders, and quite frankly professionals, they understand it doesn't go higher, but the difference is that a lot of retail traders will still chase it into the vertical moves, and then that actually subsequently kind of has the feedback loop of giving us a sharper than expected mean reversion move to the downside.
Yeah, we're not getting very good video from you in terms of the visuals of your shop, but let's bring up a chart so we can take a look at precisely what it is we're talking about here. And I think you've got, what have you got in front of us? I think it's Microsoft, isn't it?
Yeah, this is Microsoft, and it gives us this exact sort of, phenomena of the steep move that goes literally vertical. We can look at other charts, whether it's a Bitcoin or a Tesla or even an Apple, and they're all doing the same thing. What will tend to happen is you'll get an equally sharp mean reversion move to the downside. And so one of the things that I will tend to look for is I try to make these weekly charts, and here it gets even crazier. But what you'll start to see when you start zoom out on these charts, on the weekly charts, you'll start to at some point start to see these so-called buyer exhaustion moves. And like for example on Microsoft, so far in this week here, as we record, this is far from over, but you can start to see some buyer exhaustion by way of this very simple wick up here. If you go back to some historical examples of other things, for example, let's say let's go into the real crazy one, Tesla. Tesla just gave us this the week before, or I think last week, this clear, buyer exhaustion point where buyers, after weeks and weeks and weeks of pushing higher, could simply no longer sustain a bid, or could no longer find more buyers. And so it's the weekly time frames on those parabolic moves that I think is more important to focus on than the daily moves.
It's interesting, actually. I mean, going back to the point I was trying to make about Bitcoin is that, in fact, if you look at that rise we've seen in Tesla, I think between the recent bottom, I'm talking about 6 or 8 months ago, and the very top, we were talking something like about 250-odd%. The Bitcoin trade, when it happened in 2017, was 900%. Now, so many people were trying desperately to sell into that, but as I said, they got their hands burned because the rise just kept on going. What is it that you're looking for? You talked there a little bit about some sort of an exhaustion trade with a big wick up on the weekly charts. But sometimes, I mean, in Bitcoin's case, it's really interesting because Bitcoin pulled back, spent a couple of days consolidating, and then it was off again. How difficult this is for traders.
It's challenging, but I think that's again why what you really want to look for is the exhaustion of some sort, or at least, or even better, the follow through selling. So I just brought up the chart of Bitcoin if you want to look at that, and you can see it here very clearly. What you're looking for here is that complete collapse of buyers on that bar that I'm looking at right now. So whether you're looking at this or the previous example, it's telling us the same thing, that buyers are simply no longer there to sustain it. And the trouble with this is that once you've seen such a big down move or an exhaustion, a lot of the sellers are then already trying to quote unquote buy the dip, whereas in reality for parabolic moves, that's usually when the corrective move, or it's really a mean reversion move, will just begin.
Okay, well, let's take a look at some recent examples. Go back that Tesla chart if we can, and take a look at where you are. Do you have a position, I should ask first of all, on either Tesla or Microsoft?
Yes, we're short out of the money call spreads, basically just making a bet the stock doesn't go all the way back up here in the near term.
Right, okay, but is there any indication at all from someone like yourself who has a depth of experience to indicate how far the pullback is going to be? Because here at the moment on this weekly chart, the pullback is minimal in terms of the ground we've made on the upside.
Yep.
Are you what are you looking out for from here? You've got a red candle there with wicks of almost equal distance on either side.
Yeah. So again, this is where we're trying to take a step back, and these we have to think about this through the lens of like how much demand came into the stock, or how many short sellers got squeezed. And probably in the case of Tesla, either way putting people long the stock. So all of that usually takes a bit of time to kind of work off those levels until you can start to see a pullback. So I think it's really, honestly, very, very difficult to put a number on. And Tesla has its own crazy dynamics. It's probably one of the most dangerous or extreme examples I've ever seen in my whole 21 years as a trader and investor. But ultimately, just to give you an idea on Tesla, I would not at all be surprised it gets us back down to 500 or even lower. And that's not even a corrective. That's just mean reversion. Just working off the levels. Now, again, Tesla is crazy, and you got to give this time. But you can look at examples after examples. When you have a parabolic move of this nature, the mean reversion does take place.
And of course, as we know, fundamentally, Tesla hasn't yet made a full year profit, but we have had full year profits, of course, from Microsoft. Going back to the Microsoft chart again, if we can, because this has got gains in the last few days. And in fact, we know that the Nasdaq has risen to records, and Microsoft is part of that record drive.
Yeah, so there's a few dynamics. So I know there's a lot of statistics floating around out there about how crazy the market cap has gotten of Microsoft and Apple together. I think the two of them make up 10% of the S&P 500. They make up as large a market cap as the whole German stock market. You can go on and on and on and come up with these crazy statistics. But there's a lot of other dynamics happening here. So one of the fundamental dynamics that's happening is ETF inflows. So it's sort of a self-fulfilling prophecy. The more people pile into these ETFs. So the largest 5 ETFs in the world, they all have these stocks as their primary holding. Even funds that are not even at all related to this what Microsoft does, like ESG funds, like environmentally friendly funds, they have this stock in there because there's such a large mega cap concentration. And so there's a reason why the chart goes parabolic. But just to give you a number on Microsoft, I see no reason why it shouldn't be able to get us back into the 150s, 160s, and that's just a mean reversion move. That's not at all a corrective move.
So you're fully expecting a drop down to that rising line of support?
Yeah, I mean, the rising line of support is not necessarily the reference point I'm looking at, but just sure. I think what we're looking for is to basically work off the parabolic move. The orderly, quote-unquote, orderly incline, if you want to call it that, of the years is one thing, but the parabolic move is usually what corrects over time. So
leave us with one last thought then about how to trade these, in your words, crazy markets in some charts, crazy markets.
Yeah. So first of all, I would certainly exercise caution, because as we've seen, and again, all these stocks we just went through, all these things are examples of how things can go longer than we ever think, certainly much longer than I would have thought. But you want to be careful, and you want to look at the weekly charts. You want to see buyer exhaustion and preferably some sort of follow-through selling. So let me just give you one quick example here in Apple. Just to make this really quick, we actually have buyer exhaustion on Apple this week a few weeks ago, but we don't yet have follow-through selling. So I want to see that follow-through selling week where we have a notable weekly close. And then personally, I like to be a seller of call spreads as opposed to shorting the stock, just because it gives you a bit more leeway. But I would trade it with caution. There's a lot of money to be made even with a small size trade if you're directionally exposed. So you don't have to make massive bets on these positions.
Good. Okay, look, it's a pleasure as ever, Serge. Thanks indeed for your knowledge and understanding of these markets. Serge Berger from thesteadytrader.com. If you want to catch up with Serge, you can do through his website.